For the last 8 months, I've been studying one of the biggest whales on the market, and I was able to reveal his strategy that he used to make over $50 million in the last 8 months or 7 months. In this video, I will teach you exactly which strategy he uses with the help of the data collected from all his previous transactions from the last 8 months. I studied him, and finally I was able to reveal his strategy. Remember, this strategy worth millions, but I decided to share it for free. And by the way, I don't use this strategy, I use my own strategy that I believe it's better than this strategy. And if you are interested in learning cryptocurrency trading and learning my strategy, learning everything about cryptocurrency, I invite you to go to the course in the description below. Okay, let's go. So this whale or this trader company, I don't know, they made more than $30 million trading cryptocurrencies. Yeah, $30 million from just trading cryptocurrencies. So what I did, I tried to study their transactions and their strategy. So for the last 8 months, I've been studying their transactions. Every time they made a transaction, they buy or sell, or leverage long sell or leverage short sell, I save the transaction. I try to make data from the transactions, and I try to understand what strategy they using. I revealed their strategy. Yes, today I revealed their strategy. I'm supposed to sell this strategy. This is not this is supposed to be worth thousands of dollars, but I decided to share it for free with you guys. I decided to share it for free in this video. So what I did, for example, if this whale made a transaction here, exactly, they made a transaction here, I will just draw a transaction here, an arrow like this, and try to apply different indicators. So I did this for the last 6 months. I've been, every time they made a transaction, I was saving it, drawing, saving it. So I saved, yes, I saved more than more than 100 transactions. And I tried to study their strategy. I tried to study their strategy. They are perfectly positioned. This whales, the crazy thing is that these whales always go against the trend. So here, this is an uptrend, right? This is an uptrend. The market is going up, but they short. They always short. The crazy thing is that they short perfectly in the high highs. Every time there is a high high, they know that this is a high high, so they short exactly at this point. I revealed their strategy. Now I will share it with you. So what I did is that for the last 8 or 10 months, I've been testing different indicators. For example, I go to different moving averages. I try to understand what they're doing with according to the average, what they behaving, what their behavior is. And what I found out that let's choose EMA, or exponential moving average. After trying many indicators, I found out that they use 3 indicators: an exponential moving average, a Bollinger Band, and an RSI. Simply 3 indicators. With these 3 indicators, all their positions and their strategy is based on simple 3 indicators, right? So let me share with you first the moving average, the exponential moving average here. Let's go. So I will choose a white color. The line should be a little bit thicker. And they use the 200 moving average, or exponential 200 length, exponential moving average, 200 length, exponential moving average. All right. What I found, the craziest thing I found that they will never open a long position if the market is above the exponential moving average. If you see the exponential moving average here, they will never open a long position. They will never open a long position. They will open only short positions when the market is above the 200 moving average, exponential moving average. And they will never open short positions when the market is under the exponential moving average. Yeah, if you go back all the transactions, so you will never find a transaction or a long position above the EMA, and you will never find a short position under the EMA. So for those who don't know, sorry, let me just explain to you. So there's some people who don't know what short position is. Short means, I'm trying here to wait a minute. All right. For those who don't know, short means sell, and long mean buy. So let's try this. This is buying and this is selling. I just want you to remember this. I just want to keep it there. For those who are new, I want to just I want everybody to understand what I'm doing here. For those who don't know, so let's go back to the chart. What I was saying is that he will never, or they, I don't know if this is a company of or a person, an individual, but I've been studying him for more than 8 months now. Look, short or long positions above the EMA, you will never find short long positions. So this direction is long position, as you can see. This direction is long position. I'm sorry, I will try to capture. Yeah, is being captured. Yeah, so this is short positions, so the direction is going down, and this is long position. So all right, this is also long positions, short positions, sorry. You will never find them doing this, a short position under the EMA or a long position above the EMA. This is the first rule. So their first rule, if we go back in time, all their transactions, there is no exception. There is no exception, literally. All the transactions above the EMA are short, and all the transactions under the EMA are long. The second thing that I found, but how they do it, why they did not open here, for example, why they did not open here, why they did not open here, right? The second indicator that I found is that, let me choose another indicator, the BB, right? The BB, and especially the Bollinger Band with the 19 length Bollinger Band. This, well, let's go back. This is crazy. Just hear me out and you will understand. All right, let's take this off. All right. You see here, every time, so the first rule is never open a long position above the EMA, so always short positions here. And the second rule is never open any position if the market is inside the Bollinger Band, so inside the two bands. If the market is here, don't open it. When you can open it, when the market goes over or out of the band, so over the upper band here in the upper zone, let's call it the upper zone, the zone above the EMA. So if the market goes above the upper band here, they will open a short position. All right, every time the market goes above, they open a short position. See the market going above, so crossing the upper band, the upper Bollinger Band, they making, or they crossing, or they open in a short position. If we go down here, for example, long positions, let's see, every time the market crosses the lower band, this band, the lower band, I'm choosing, let's choose, yeah, yellow. The lower band here, they open a long position. So the first rule is applied. The first rule is applied because the market is under the EMA. The second rule is also applied since the market is crossing or going out the bands. So they will never open positions here. When the market is inside, they will open positions here. They can't open a short position here because why? Because we will never open, as we said, the first rule, we will never open short positions under the EMA, under the moving average, the 200 period moving average. We will open only long positions when the EMA or the market is under. Sorry, we will open only long positions when the market is under the EMA and when the market goes off or goes out the bands. So it's crossing this lower band, the lower band from the Bollinger Band, they open position. If we go back to all the transactions, the same thing. The market is crossing, they know that this is a lower low and they should make a long position. They made a long position and look how much money they made. They made all this. Crazy, right? Same thing here. They opened here, they opened here, and they made all this. The first rule, the market is under the EMA, so they can open long positions. The second rule is that the market is crossing the lower band, so this means that they can open also a long position. They did it and they made all this. So let's go. How much money they made, how much profit. So this was like, yeah, they made almost 2%. Imagine 2%. They open positions with two. Remember, they open positions with $3 million. They open positions. They make 2% from $2 million in how much? In 10 hours. So in 10 hours. That's crazy, right? Here, how much they made? They made, so from this position, they made almost also 2%. In the next day they open, so they invest here, they invest three or $4 million. They make 2% in 10 hours. Sorry, same thing here. If we go back here, in the same day they will open position. They make 0.71% with the short position. So same thing. So the second rule, let's go. The second rule is here. So the first rule, the market, we will open short position if the market is above the EMA. So really the market is above the EMA. And the second rule is never open a position inside the band. So wait for the market to go over, or over the upper band, for example, in this case, over the upper band, or if we are under, wait for the market to go under the lower band. So same thing. Let's go. Same thing here. Look, they opened position here at the top of the wick. They waited and they made all this. This is a profit here. This was a profit, right? Let me just change the color. Let's choose, for example, blue. Yeah, ticker blue. All right. Same thing here. The first rule is applied. So the market is above. Or let's go to this one. Yeah, same thing here. They made profit from this point. Also this one, the first rule, the market is above the 200 moving average, the 200 exponential moving average, right? And the second rule is that the market is crossing the upper band, So this one, this one is called the upper band, and this one is called the lower band from the Bollinger Band. This indicator is called Bollinger Band. All these three indicators, 1, 2, 3. The middle one is the moving average, the 20 period moving average. All right, same thing here. Same thing here. They open position here. Why? Because the market was above the 200 moving average, and the market also was crossing the Bollinger Bands. And I found out also that they use the RSI, the stochastic RSI. Yeah, they will never open positions when it's helping them understand if the market is overbought or oversold. So It doesn't matter if it's overbought or oversold, but it has to be one of these. Either market is overbought or oversold. So either here or here you can open position. So this is confirmed. The third rule is confirmed. They wait for the market to go oversold. For example, here the first rule is applied, the second rule is confirmed, and the third rule is confirmed. So they will open a short position. Same thing here. Same thing. Let's go. Sorry. Oh, I've heard myself. So same thing here. They opened a short position. Why? Because the market was above the upper band, or sorry, the EMA. The second rule, the market was crossing the upper band from the Bollinger Band, and the third rule was the market was crossing. Sorry, let's wait for it. The stochastic RSI should be a 75 and a 25 lower and upper levels. So here the market is almost overbought. All right, so they opened a short position. So look, this rule wasn't 100%, the third rule wasn't 100% confirmed. Even that they opened a position, but they didn't make a lot of money. Why? Because, so look, it was a small downtrend, a bearish trend. So they did not make a lot of money because the third rule wasn't confirmed, 100% confirmed. But in this case, for example, the first rule, the market is above the 200 period exponential moving average. Also, the market is crossing the upper band from the Bollinger Bands. So this should be a short position, right? Because we open all the short positions above the EMA. And the third rule is that the market is here. As you can see, the market is the market is overbought. So they opened a position here, short position, and look how much they made. They made all this profit, right? Also this one here, the market was above the EMA. The market was above the moving average. The market was above the moving average. Also, the market was crossing the upper band, and the RSI was an overbought. So they opened short position and they made around this. Yeah, made around 0.74% profit. Same thing here. If we go back to all the transactions they did, same thing. So every time they open a short position, they know that this is a higher high, and this is going to make them a lot of profit. So guys, also my strategy is mentioned in the description below. I use my own strategy to predict the movement of the market. My strategy is better. Let's call it this way. My strategy is better than their strategy. This is why I'm not using their strategy. I'm going to use my strategy. I'm going to stick my strategy, but I thought that this is interesting. So yeah, I would like to share it with you.